Your piece is reflective of the overall narrative, and that is these stories keep popping up, and engagement is strong, and advertiser interest is strong. Why isn't that changing, as far as we know?
So we ask the question every quarter ever since Cambridge Analytica this time last year, and it is about their reach, it is about the efficacy and the types of returns that advertisers are seeing on the platform.
And this is across the board, according to your note this morning, but especially pronounced at Insta. Is that right?
Yeah, Instagram by far. I mean, I do think that's where the momentum is. Instagram stories in particular has turned out to be a very good ad unit for those that have started working with it. It's still not pervasive. Not all advertisers are working with it, but the direct response advertisers have really taken to it and run with it, and there's a lot of runway there.
Heather, what are the chances that Wall Street's perspective on Facebook shifts this quarter? Because there's some deceleration projected. You think it's going to be less than the rest of the street does. Based on that, are perspectives likely to shift on how Facebook guides, whether it's sandbagging or just being realistic?
So I think there's a couple things you have to remember. They also had the start of the Forget Me campaign, so you can be forgotten on their platform if you want. I think when management talks about that mid-single-digit deceleration, which people are factoring in, they've got that. The management team has to think about that and what the impact is going to be, and that's new ground for them. So I think there's a little bit of conservatism from that, but I think they also understand that, you know, they need to keep all of us in check, so to speak. So I do think they'll continue to be cautious just because some of these third-party forces that are coming at them, they just don't know how it's going to impact them. But the advertiser feedback so far, like I mentioned, just continues to be really good in terms of this being a platform where they continue to want to spend more money.
It's incredible because if you look at Facebook and all the different events that have taken place, founders of acquired companies leaving, all of the different privacy and data scandals that have happened along the way and issues along the way, you'd expect the stock, I mean, it's been a roller coaster ride.
Right.
Stock, though, is up 37% year to date. It's actually up 9% over the last 12 months now. Talk to me about your valuation and how it stands against peers.
So, I mean, one thing to keep in mind, in almost every meeting we have with clients around the globe, regulatory concerns come up, questions on privacy. So there has to be some impact on the multiple. It's hard for us to discern exactly what the magnitude is of that multiple depression, but clearly if you look at where it's trading at versus its growth rate, there is some impact. You know, I mean, the best comp for this is obviously going to be Alphabet, and if you look at where that's trading, it's trading at, you know, a slight, depending on where your numbers are, so the Alphabet's trading at a slight premium to where Facebook is, and that's the question, is how long is that going to persist for? You know, one of the other big questions is also, though, as we start looking towards 2020, which is where investors are, it's how much total expense growth is Facebook going to have to continue to make some of these changes that they've been making, especially shifting to ephemeral content and integrating the back end. To me, that's probably a more important question. The top line upside is going to be there, but we have to think about what expense growth looks like in 2020.
So we've had some argue in recent months, I guess, that their initial guidance, their kitchen sink guidance on expense growth was hyper aggressive. It's not going to be that expensive. Are you not sure?
No, I agree with that. For the current year, they guided, and they've done a very good job at always coming in at the very low end or below that. I'm more thinking about 2020, where, you know, there was commentary from Mark Zuckerberg on the third quarter call, kind of recognizing that at some point they understand that revenue growth and expense growth has to come closer together, right? It's been very wide at this point. You've seen a margin contraction. But for 2020, where is that going to be based on some of the changes he needs to make to the platform? So that's, I think, one of the bigger debates that has to come out, you know, over the course of this year. That probably is something else where that plus privacy means you're not maybe going to get the same type of multiple expansion as you would have in the past. But we still feel really good about the top line opportunities. So it's a question of trying to balance that.
Do you think they've had growth opportunities that they've missed because they've had so much else to work on? Other products,
It's a great question. I don't think so. I do think they probably had to shift from being as front-footed as they were in the past last year. So maybe it slowed down some things, but I mean, he made it very clear on last quarter's call that they are front-footed again, and with things like Instagram shopping and the monetization of Messenger and them talking about WhatsApp, they seem to be very much on the front foot where this is going to be a year of new product experience and new engagements.
When you do a sum of the parts assessment of Facebook, how are you factoring in WhatsApp, and what do you think the opportunity there is in terms of making more money?
So we don't do a sum of the parts. We just look at this on a PE basis. At this point, there really isn't. It's trying to figure out what the business model for WhatsApp's going to be.
Yeah.
I think first and foremost, Messenger's probably the closest one that they're going to monetize next in terms of the next big platform. Certainly prior to that, we would expect Instagram shopping to probably second half of this year be more of a story than from the partners that we're talking to. That's where they're focused. Messenger's, in terms of the next big platform, the one that people are expecting next. And WhatsApp, I still think people are debating how is this going to monetize over time? Is it going to be a payment network? Is it going to be some sort of a AI chatbot type usage experience where it's going to engage with us that way instead of being traditional ads that we think of today? But I think people are taking a much more longer-term view on that.
Heather, you say they're front-footed this year. I want your assessment on the clarity and effectiveness of leadership right now. It's kind of hard timeline-wise because we get headlines that are really about 4 to 8 years ago in the mix with stories about what's happening right now. And you could assess some of the stuff right now as Zuckerberg actually taking action to fix some of the things that happened a while ago. How do you read it?
I think you're right. I mean, the stories that have come out recently, a lot of them are on, it's old stuff, right? Going back to 2011 to 2015. And I'm not saying those aren't important, but in terms of how the company's been trying to move forward, I think they've been trying. He's obviously calling for regulation and wanting some rules, and people debate whether or not he's doing that because it's self-serving or whether or not he really wants that to happen because it's what's right. But I mean, those are the debates going on. But I think we have to judge them on some of the changes they've been making over the last 12 to 18 months. And they look to outsiders. It at least looks like they're trying to move in the right direction. Keep in mind, there's over 2 billion people using this platform. It kind of is hard to police everybody on the network.